Okay, welcome back. We've two things left. Well, I suppose two main things to add in here is the sale of buildings. Then we'll have to total these four here, get the net cash inflow, and the second thing, I suppose, important thing is the increase in cash as well. So those two, most importantly, we have to look at. So the sale of buildings, first of all. Let's see if I have a blank piece of paper here. Yeah, this will do. What we want to find out in particular is about the buildings that we sold. What was the original cost of those buildings? How much depreciation had built up, if you like, accumulated depreciation had built up, and what the net book value of those buildings was on our books. Okay, so in order to do that, then first of all, we'll just look at something up here and then the balance sheets. So it says, new buildings were purchased during the year for 200,000. Buildings were also sold. Okay, so new buildings were purchased during the year for 200,000. So if we look at our land and buildings over here in the balance sheets, they were 635,000 and then they went up to 720,000. Well, that's not what you'd expect if you purchase new buildings for 200,000. You'd expect this to go up by 200,000 up to 835, but it only went up to 720. And that's because you also got rid of some buildings. So if we look at that, first of all, the buildings at cost were 635,000 in 2015. They should have gone up by 200,000 when you purchase new buildings at a cost of 200,000. So they should have gone up to 835,000. However, for some reason, they ended up at 720,000 is the cost of those buildings on our books in 2016. 720,000. So for some reason, again, they must have gone from this down to 720,000. In other words, they must have gone down by 115,000. And the reason, of course, is because we disposed of some buildings. We got rid of some buildings. So if the cost on our books went from 635 up to 835 and down to 720, the going down part must be related to the cost of the buildings that we disposed of. In other words, this 115,000 must have been what we paid for stay for the buildings that we got rid of during 2016. So 115,000 was the cost of those buildings. That's just by looking at the cost parts in this in these balance sheets. And again, even though it's not laid out, I suppose, in a line as cost, depreciation, net book value, this is cost, depreciation, net book value. Cost, depreciation, net book value. Okay, so looking at the depreciation parts next, the 75 and the 60. And if we do the same thing, if we say in 2015 depreciation was 60,000. So have a look at that over here, 60,000. Okay. And they tell us in the question, they say, depreciation charge for the year on buildings in arriving at operating profit was 42,000. They say the annual depreciation on buildings was 42,000. Then the accumulated or the aggregate depreciation should have been 60 plus another 42. In 2016, our aggregate depreciation should have been 102,000. Shouldn't it? But when we look at what the actual figures say, they say the aggregate depreciation in 2016 is 75,000, that it only went up by 15. But we know, because it told us in the question, that the annual depreciation was 42,000. So we know it did indeed go up by 42,000 to 102. But again, what we're not seeing from the balance sheets is the fact that it also went down again and it ended up at 75,000, just like the balance sheet tells us. So it must have gone down by 75 and 102 is what, 27,000. And we know that the only way aggregate depreciation goes down in a balance sheet is for, well, two reasons. If there's a revaluation and we set our depreciation back to zero, which there wasn't in this question. And the other reason is if you got rid of an asset, because when you take the asset out of your books, then you must take any depreciation associated with that asset out of your books also. So this minus 27,000 the depreciation going down by 27,000 must be because of the disposal of the building, and that 27,000 figure must have been the depreciation that we had on our books in regard to that building that we disposed of. So we now have our cost of that building we got rid of, the depreciation on that building that we got rid of. So it's just a simple matter of subtraction to get the net book value of that building that we got rid of. 115 minus 27 is 88,000. That's the net book value of that building we got rid of. Now, what do we know about it? We know that the building was sold during the year at a loss of 15,000. Well, if we say its value was 88,000 and we sold it at a loss, it means we sold it for less than 88,000. We sold it for less than what it was valued at on our books. And if we sold it for a loss of 15,000, it means that we sold it for 88,000 minus the 15. We must have sold it for 73,000. That's how much money we got for that building that we sold. And that's what we put in here in our sale of buildings, the amount of money we got for it. And we put it in as a plus because it's money we got in for selling a building. So adding these four together, what's that? 78 to 80, that's minus 2,000. Okay, then we can finally total all of these things, or subtotal if you like, to get down here, and that is 88,500. Okay, that's a plus, and then we can put the three of these together. What's that? 83. So that's, excuse me, you can't see. 85 and 83 is plus 5,500. Okay. So just before we leave this, one last thing to say is, now in this particular question, they gave us this 15,000 figure. Buildings were sold during the year at a loss of 15,000. In some other questions, what they do is instead they give you this amount they sold for the buildings for. They might say buildings were sold during the year for 73,000, meaning that's what you got, and then you must work out whether they made a profit or loss. Now it's the same logic you use in that case. You still have to work out cost, depreciation, net book value. But when you have the 88 net book value and you have the amount you sold it for, 73, then you can just subtract the 73 from the 88 and work out whether it was a loss. Or in this case, if it was 73 and 88, it would be a loss of 15,000. But I suppose if they had given you that information, then you would have had to do this calculation at the beginning when you were doing the reconciliation of operating profit. When you were doing the first reconciliation statement, you would have had to do all those workings just to get this 15,000 figure. So it would have been more difficult here. But then when it came down to here, you would have had no working to do to get this 73,000. So it's much of a muchness which way they give you the information in any particular question. Okay, so last thing then is we've it all totaled up and tallied, and we have our increase in cash of 5,500, and just like we saw at the ordinary level, you want to double check those figures to make sure that they're correct. And so what we do is we go over here and we have a look. Now in ordinary level, usually there was just cash, and you checked what you had the previous year and what you had this year, and you subtracted one from the other, and by the looks of this, it's saying that you had an increase of 1,500 in cash. But that doesn't tally with our increase of 5,500, and that's because we haven't taken into account bank, which we consider to be the same as cash. Really, cash on hand or cash in the bank is the same thing. So if we were to just to double check to see if that 5,500 was correct, we look at what situation is with cash in 2015. We had 2,000 euros of cash in hand. We had an overdraft, because it's down here in the less creditors amount, or the current liabilities amount. We had an overdraft of 12,000. We owed the bank 12,000. So our net cash position there is we're plus 2,000 minus 12,000. Let's just write it up here. Plus 2,000 minus 12,000. We have minus 10,000. Okay, that was in 2015. In 2016, we have cash of 3,500. So plus 3,500 in cash. And our bank overdraft is down to 8,000 now, so we're only minus 8,000 in the bank. And if we add the two of them together, it gives me a minus 4,500. So it means in 2015 we were at a minus 10,000, and 2016 we were minus 4,500. So our cash position has improved, if you like. It has increased from minus 10,000 up to minus 4,500. And if we subtracted one from the other, we'll see that it's gone up by 5,500, which is what we got over here as well. So we're happy with that there.